Hello and welcome back to Mirror Review. Gold, the shimmering metal that has captivated humanity for millennia, is once again making headlines. In the past few months, the price of gold has skyrocketed.
Gold prices have surged to a record high overnight.
Globally, gold prices are up by over 16%.
Gold prices hitting an all-time high, rising above $2,100 as
gold rush, the precious metal soaring to a new record high today, topping the $2,200 mark for the first time ever.
Reaching new all-time highs of $2,450 in May 2024, leaving investors and everyday people alike wondering, should they jump on the gold bandwagon? Gold increased 264.98 USD per troy ounce, or 12.85% since the beginning of 2024, according to trading on a contract for different CFD that tracks the benchmark market for this commodity. Historically, gold reached an all-time high of 2,450.05 in May of 2024. The answer, as with most financial decisions, is not a simple one. Gold has long been considered a safe haven, a hedge against inflation and economic uncertainty. But with the global landscape constantly shifting, the question remains, is now the time to invest in gold, or should one hold off? In this comprehensive analysis, a deep dive will be taken into the latest gold price trends, expert forecasts, and the factors driving the market. By the end, readers will have a clear understanding of whether gold is a wise investment in 2024 and beyond. Gold demand has surged in 2024, fueled by economic uncertainties gripping the globe. World Gold Council data for Q1 2024 shows total gold demand actually increased 3% year over year. Central banks are leading this gold rush, adding a significant amount to their holdings in Q1. This isn't just a new trend, it's a historical move to safeguard national wealth. Why? Because during inflation and economic slowdowns, investors flock to gold. They see it as a shield, a reliable store of value when everything else seems shaky. As economies slow down, investor sentiment gets jittery. This year, global growth projections have been slashed, making gold's safe haven appeal even stronger. Gold shines brightest when markets are turbulent. Take the 2024 economic slowdown. Investors rush to gold, driving prices to a record high of $2,450 in May. When other investments falter, gold stands tall, offering stability and security. This trend isn't just theoretical, it's backed by data. Central banks purchased a whopping 1,136 tons of gold in 2023, the highest in 55 years. Plus, Goldman Sachs has a positive outlook, forecasting a higher average gold price for 2024. Gold's allure during these uncertain times is clear, making it a beacon for those seeking safety. But since when and why did countries start keeping their gold in other countries? Countries began storing gold reserves abroad primarily during and after World War II. Here are the key points condensed. Since World War II, countries have stored gold reserves abroad for several reasons. Security. Storing gold in foreign vaults protected against domestic political instability, invasion, and theft. Accessibility. Major financial centers like London, New York, and Zurich facilitated easier access for international transactions, including buying, selling, and using gold as loan collateral. Diversification. Distributing gold across multiple countries mitigated risks related to domestic economic crises and currency devaluation. Reputation. Holding gold in prestigious financial centers enhances a country's creditworthiness and reputation, signaling financial stability and responsibility on the global stage. The UK and USA became popular storage locations due to their robust financial infrastructure, making London and New York key hubs for gold reserves. However, the tides are turning. In a surprising move, India recently repatriated 100 metric tons of gold from the UK, citing the need to evenly distribute its reserves between domestic vaults and foreign storage. This decision was influenced by geopolitical events, such as the US derecognizing Russia's gold reserves, which highlighted the potential risks of relying on foreign storage. India is not alone in this shift. According to the World Gold Council, central banks continue to buy gold at a record pace in the first quarter of 2024, adding 290 tons to official global holdings. This consistent and substantial purchasing by the official sector underscores gold's importance in international reserve portfolios amidst market volatility and increased risk. African nations, such as Ghana and Tanzania, have also been repatriating their gold reserves, driven by a desire for economic sovereignty, risk mitigation, and trust in domestic storage. By bringing their gold home, these countries aim to assert control over their national wealth and reduce their reliance on foreign powers. As the world becomes increasingly uncertain, more and more countries are realizing the importance of having their gold reserves close at hand. This trend, known as the Great Gold Repatriation, is a testament to the enduring value of gold as a store of wealth and a symbol of economic independence. So gold reserves aren't the only ones on the move. The gold market is seeing a surge in consumer demand, with global jewelry, bar, and coin consumption reaching new heights in 2024. According to the World Gold Council, jewelry demand remained resilient in the first quarter, only falling 2% year-over-year despite record high prices. This was driven by strong demand in Asia, which countered decreases in Europe and North America. Bar and coin investment also increased by 3% year-on-year, remaining steady at 312 tonnes. China has been a standout, with renewed investor interest in gold due to the weakening local currency and poorly performing domestic equity markets. On the investment side, the outlook is equally promising. Gold ETFs, which had seen outflows in recent quarters, are now attracting renewed interest, particularly in Asia. Investors are turning to gold as a hedge against inflation and a safe haven asset amidst economic uncertainty. Factors like interest rates and bond yields will continue to play a crucial role in shaping gold's investment appeal. As the Federal Reserve maintains its higher-for-longer stance, gold's allure as an alternative to low-yielding bonds is expected to grow. As we look ahead to 2024, investing in gold presents a compelling opportunity shaped by current trends and projections. The surge in global demand, driven by both cultural significance and economic uncertainty, underscores gold's enduring appeal as a safe haven asset. The phenomenon of gold repatriation reflects nations' strategic moves towards securing their wealth amidst geopolitical shifts, highlighting its critical role in national financial strategies. For those considering gold as part of their investment portfolio, the outlook remains positive, with continued interest in gold ETFs and retail investments offering accessible avenues for participation. Whether you're a seasoned investor or exploring opportunities for the first time, understanding these dynamics is crucial. Join the conversation by sharing your thoughts and insights. What's your take on investing in gold in 2024? Comment below and drop down your suggestions below for our upcoming video. Thanks for watching.